investors. Welcome to the third and last part of your Technical Analysis 101 from Charts to Profits webinar series. We are thrilled to have you all back, but if you weren't able to catch our first and second part, don't worry because you can catch the replay on our Facebook page and YouTube channel. Today, we'll be discussing the last part of our webinar series, which is about how to improve your trading. But just a reminder to all participants and the audience, before we begin, to please keep your microphones muted during the entire session. And if you have any questions, feel free to send them in the chat box or comment section, and we'll address them later in the Q&A segment. So without further ado, let's dive right into it. So our speaker today is Jared Tin, my fellow Dragonfire researcher. Jared was a financial economics and finance major at DLSU, was the former executive vice president for investment analysis at DLSU's Investor Society, and ranked second in the Investigram's 2021 Trading Cup. He currently trades in the Philippine and US markets. Take it away, Jared.
So, hi guys, thank you for coming again. So, we're on to our last series in this webinar. So, here we will now discuss how to improve your trading by journaling. So, let's just have a recap of what we've discussed in the past two webinars. So, first is creating your watch list using fundamental and technical analysis. Then once you've already crafted your watch list, you use technical analysis to plot your support and resistance. Then you determine your entry, stop loss, and target price. So that is your trade plan. Then once you have a trade plan, you don't just go all in, right? So you have to compute your position size, which we already taught in the last webinar. Then after you compute your position size, you execute the trade using Dragonfly's platform, which I also showed you guys the many uses of the Dragonfly platform plus all the special orders. So what's the next step, Franco, after executing the trade?
To journal your trades for the future.
Right? So after you execute your orders, it doesn't end there, right? So there's an additional step to it, which is journaling. So let's have a deep dive into journaling. So first question is, why even journal your trades in the first place? So my answer to that is by asking another question. Do you remember what stocks you traded last week, Franco?
I do not.
How about last month?
Nope.
How about last year?
Nope.
Right? Do you remember at what price you bought and sold your stocks?
No.
Do you remember why you bought it and sold it?
No, is that a bad thing?
Maybe. So basically, that's the point why we need to journal, because we don't remember each and every trade we made. And we need to. Why? Because we can identify our mistakes in our trades by having a journal. So we can identify our mistakes and address them as soon as possible. So that's why we have to journal our trades. So let's discuss what you have to include in your trading journal, diba? So there's a lot, but don't worry, I will make it a lot simpler in the next slides. But first, let's enumerate muna. So first, what stock, diba? Next, when and at what price did you buy, diba? Next, did you go all in or not, diba? So how many shares? Di naman pwede all in, diba? So did you follow your position size, all that? Then another important one, why did you buy in the first place, diba? That's something you need to remember. So na-hype ka lang ba? Did you buy because there was a setup? You bought on support? You bought on breakout? Or sinabi lang ng kapitbahay mo na bilhin, then you bought it na, right? Next, what trade setup were you trading? So there are only two, right? Buy on breakout and buy on support. So either of the two. Next, when and at what price did you sell? So did you sell when it hit your target? Did you sell because natakot ka, may bad news? Or did you sell because happy ka na, di ba? Kasi you're gaining na. Or did you sell because it hit your stop loss, di ba? So you have to remember in why you sell. Next is how much did you earn or lose in peso and in percent gain, right? So what's the end result of the trade? Did you gain money? How many percent were you up? All those, right? You need that for your accounting of your trading, if you're to know if you're profitable or not. Next is a screenshot of your chart. So I think this is also important because most traders are visual, right? So if you just tell a person, I bought here, I sold there, it doesn't really give them much to think about, right? But if you show them the chart, now, okay, I bought here, then I sold there, diba? So it's a lot easier to visualize, right? So it's very important. Then last is the most important, the remarks and lessons from the trade. So what did you learn from it, diba? Ano natutunan mo? So if you won, diba, what did you learn that you did well? Parang you were patient, tapos you waited for it to hit your target price. Or if it's a bad trade, what did you do wrong? Like sold too early, parang ganun. Or you did not follow your stop loss. So you have to mark down all the lessons from those trades. So let's go into each of them deeper. But essentially, this is what a trading journal should look like. So here you would have date bought, date sold. So these are when you bought and sold. What's the stock? You can just put the ticker, how many shares, then your average buy price, your average sell price. So there your entry and your exit. Then here, what was the position size? What's your gain and loss percentage-wise? Then as a percentage of your portfolio, did you win or did you lose? And here, this is optional. You can also put how long you held the trade, 3 days, then how many percent of your portfolio did you allocate to the trade? Then what setup? Then here the chart, you can put like a URL to TradingView, for example. So you can do that. Then your overall remarks. So essentially, that's how a trading journal should look like. So all the relevant information about the trade is there, diba? So it's easy to review, diba? So if you forget about what you traded yesterday, last week, last month, tignan mo lang yung journal mo, diba? Nandyan na yun. So essentially, a trading journal, it works as a record book of all your trades. So there, parang log sheet siya, diba? So all your trades, it's all on an Excel file, diba? So you can see it all there, right? So very clear, easy to visualize. So first, this is the trading journal that I personally use, so AOL Trades. So for me, they have good analytics and visualization. So if you guys want to look at a free trading journal, you can look at AOL Trades. It's free to download. But for others who you're not really into the visualization and the trading statistics, you can also use the Dragonfly Trading Journal, which is one of the widgets in your Dragonfly trading platform. So if you just want to write like mental notes per execution, you can put it here. So sample here, CHP, if you bought, you can add a note, good entry, or like if you did a good sell, you can put a note, good sell, then whatever note you have. So this also works too if you just want to jot down what you were thinking at that time. So I highly recommend using the Dragonfly Trading Journal. Then you can also put like tags. So example here, you can put what your strategy was, or was it a news-driven trade? Was it an impulse trade? Or this was like an error lang or something. So you can put some tags here. So there. Now let's dig deeper into each of the ones that I enumerated that should be in your trading journal. So first, what stock, diba? So what did you trade? Was it a blue chip, second liner, mid cap, or basura, diba? So those are the three types of stocks, diba? So what kind of stock were you trading? Next, you should ask yourself, what was your stock selection process, diba? So right from our first webinar, we thought that there's a process into selecting your stock, right? So you use fundamental and technical analysis, right? So that's what you have to think back. What kind of stock selection process did you use? So you ask yourself, what was the fundamental catalyst? Ano yung fundamentals ng stock na yun that you traded? Meron ba in the first place? Diba? So you should look back and answer that. Next, what was the trend of the stock? Diba? Was it uptrend, downtrend, sideways? Nasa support ba siya or resistance? Was it a buy on support or buy on breakout trade? Then the most important is, did both fundamentals and technicals flash a buy signal? Did they go together? Or you just relied on one? Parang you relied on technicals pero you didn't even check the fundamentals, diba? So it's really thinking back, were the fundamentals and technicals aligning? So that's how you determine if your stock selection was good or not. So that's what you have to review here. So when you ask what stock, this is to allow you to refine your stock selection process. So there should be a good reason why you bought the stock. So you have to refine that by looking at your journal. What were your past trades? What stocks were you buying? And did they make any sense, diba, based on your analysis? So that's the first one, what stock. Next is, when and at what price did you buy? So now, based on your stock selection, what was your trade plan in the first place, diba? And did you follow it? So when you had your entry, stop loss, and target price, sinunod mo ba siya, diba? So did you enter at your planned entry price? Or parang naghabol ka, diba? So example, you plan to buy the stock at 1 peso, pero umakyat na ng 1.10, hinabol mo pa rin, diba? So that means you didn't follow your trade plan, diba? So that's something that you did wrong. So you have to think about it if you really followed your trade plan or not. Then another question could be, did you forget to set your conditional order? So example, buy on support, diba? You could have set a limit order, pero you forgot, diba? So parang you chase the price, diba? Or example, buy on breakout, you didn't set your conditional auto breakout order. Then price already went up, then you were chasing it, right? So those are things that you have to think about. And then another important is, was the stock even part of your watch list, the stock that you bought? Because minsan out of impulse, diba? Parang, uy, pwede na yan, right? Then you just buy it, even though you didn't plan it naman eh. It wasn't in your watch list. So here, we're trying to refine our execution. We want to make sure na yung stock na binili natin, it was within our trade plan, diba? And tama yung execution. If my plan was to buy at 1 peso, dapat I bought at 1 peso. If I didn't buy at 1 peso, then I have to ask myself, what went wrong? Did I forget to set my order in advance? Was I not there? Or did I change my plan? All those. So basically, you want to make sure that whatever trade plan you have, if the market went to that level, dapat na-execute mo ng tama, diba? So here, you're refining your execution. Next, how many shares did you buy? So Franco, have you ever had those instances na you went all in?
No, I've actually never gone all in a stock because
Yes.
honestly, I really rather not risk a lot on one single trade because I don't want to burn out, right?
Yes, that's true. So that's exactly why you have to ask this question. So did you go all in, right? So obviously you're not supposed to. And you're supposed to follow whatever you computed to be your position size, right? So if you have a trade plan, you already computed your position size, which should not risk more than 1% of your portfolio, right? Did you follow it, right? So if you computed your position size, that's the maximum amount of shares you were supposed to buy for that trade. And another is, did you account for the trading fees in your position size? Because sometimes you might find that if the stock hits your stop loss, you lost more than 1%, then that might be because you didn't account for yung trading fees natin, right? So that's another thing to think about. And did you buy the right amount of shares according to your trade plan? So parang there are some times na you just misclick, parang you're typing how many shares pero you added another zero, so parang tumas yung allocation mo, or you you mistyped a number or something. So there you're trying to figure out if the allocation of the stock you traded is correct, diba? So dapat same yan. Whatever position size you computed, that should be exactly the number of shares, or even less if you're depending on what the conditions were. It should be exactly the same as your computed position size. So here you're refining your allocation. So next, why did you buy? Okay, so was it an impulse or FOMO buy? So basically, when you buy a stock, it should be part of your watch list, and you should already have a trade plan for it. If it's none of the two, if it wasn't in your watch list, or if you didn't have a trade plan, then you shouldn't have traded it, right? So that's something you have to think about. So you should try to avoid FOMO trades, or the ones planned on the spot. Because for me, I think those trades planned on the spot usually, if you win, then good for you. But if you lose, I think those are the ones that really hurt you a lot, because you really didn't plan for it, so you really don't know how much you're risking, right?
Jared, have you ever gone FOMO on a trade?
Oh yes, definitely. Especially during my first few years in trading, definitely I've FOMO'd on a lot of trades and I got burned. So yes, this is really speaking from experience.
I remember the last FOMO trade I had was for Dito and ASEN back when they rallied so much because of the news. Do you remember?
Yeah. That was crazy when Dito went from 1 peso to 20 pesos.
Yeah.
Those were the days. So here, basically, we just have to ask ourselves, was the stock in our watch list? And did it hit our planned entry price based on our trade plan? And also, going back, right? Did the fundamentals and technicals flash your buy signal? Right? So for asking this question again and again, because that's really how the reflection process works. You have to circle back and make sure you have to keep asking yourselves the same question, right? So that you know if what you're doing was correct, right? Then another important thing to introduce is, were you in the right psychological state when you bought? So when you're trading, dapat you should be level-headed, diba? You shouldn't be emotional. So example, parang if you fail the test in your exam, if you failed a test in your class, then you're feeling bad, would you trade? Diba? Parang, no, right? Because you're feeling bad na nga, tapos yung mag-trade ka pa. Tapos if natalo ka pa, then double frustration, right? So parang those are the nuances you have to think about. So you have to trade when you're in the right psychological state. Another example is you're on a losing streak. Parang tatlong trades na talo ka. Then your psychological state is that you have to make back all your losses. So what happens is you're revenge trading. Parang you only bought the stock kasi gusto mo gantihan yung market, di ba? You want to get back your losses. So that's something that might come to bite you at the end, right? So here, when we're asking why did you buy, here we're also trying to refine your trading psychology. So when you buy, dapat objective yung buy mo based on your watch list, based on your trade plan, diba? Then you execute. If there's anything else in your mind other than the objectivity of your trade plan, then that has something to do with your trading psychology na. So here's an example. So this is a deadly combo when you're over trading and you're revenge trading. So here, example, I was on a losing streak here. So I kept on losing, but I kept on trading pa rin, diba? So parang when I'm trading, my mindset is to make back all the losses I made. So here, if you see my journal, it's here. I give up, I give up, I give up, I give up. I don't know. But I just kept on trading, right? That's what led to all these big losses, right? So this is the reality of trading, right? If you can be a good trader, but if your psychology is not at the right state, you will get caught in this cycle where you're having consecutive losses, and it usually is very hard to crawl back up, right? So this is something that you really want to avoid when you're trading. So that's why you need to check your journal. If you see that, oops, medyo nag-overtrade na ako, di ba? Take a break, like maybe 1 week, don't trade. Next, and after a week, you can trade again, but maybe smaller size than what you were trading before, so that you don't get caught into this cycle where you just keep on losing, then you're so frustrated, but you keep on trading. Diba? That's really the hardest part of being a trader when you're during the bad times, right? So there. Next is, what trade setup were you trading? So was it a buy on support or buy on breakout? So those are the only two trade setups that I think we should be looking at, right? So if it's on support, you buy the bounce of support. If it's near resistance, you buy the breakout. That's it, right? So you ask yourself, what was the trade idea, right? The next is, did price confirm the trade setup? So what do I mean by this? Baka, so let me draw it to illustrate. So let's say you have resistance here, you have support here. Let's say your idea was a buy on support trade. But prices here pa lang eh, midway, or you bought na here. Then you didn't follow your plan, di ba? Kasi your idea was to buy at support. So why are you buying when it's not yet at support, right? Or another example is, your idea is to buy the breakout, but price is here pa lang, you bought na. But your idea was to buy the breakout, di ba? So that's something you have to consider. Did price confirm the trade setup? Kasi baka price didn't even hit resistance pero you already bought way too early. Then you're not following your trade setup, which is a buy and breakout. Or baka you're trading a buy and support, but it's not even at support yet, pero binili mo na kasi makate kamay mo, di ba? So that's something. Next is, did you form fit the trade setup? So parang, if ever you have that feeling na parang pwede na to, and that might not be a good trade, because you're trying to form fit eh. Parang yung gusto mo sa market, pinipilit mo sa market, di ba? So kahit nandito pa lang, you're saying buy and support, pero support's here eh. But you're saying buy and support pwede na dito, right? This is a buy on support, pero support's here, right? There's a mismatch. You're trying to form fit the trade setup. Like here, you said buy on breakout, pero wala pang nasa resistance, you're buying here na. So you're trying to form fit the trade setup, even though that's not what the market's giving you, right? So that's something that we have to avoid.
Yeah, I just want to add that, because if you journal these trades, it really helps you in the future as you prepare for your next trade plan. Because when you go back and look back at your trading strategy, you'll see what you've journaled and say, oh, I'm about to make the same mistake again, and you can see what happened. Like, for example, if you bought too early and you didn't wait for your entry point and you lost it, you can, in the future, you'll go back and think, oh, okay, I cannot make the same mistake again. And so with that, you become more patient. You try to play it out longer, and you avoid trading eagerly.
Yep. So basically, think of yourself as the doctor, right? And you're getting the symptoms of the patient. The symptoms is basically your trading journal, right? So you have to review that. Then the doctor will be like, why does he keep on making the same mistake, right? And this must be the problem, right? For
Yeah.
example, if someone is coughing, then probably the doctor's like, okay, there's something wrong, blah, 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 right? Or example, he keeps on limping, the patient's limping, then probably pilay siya, di ba? So something like that. You're like a doctor trying to diagnose yourself, right? So That's how you can think of your trading journal. So that's that. So here you're trying to refine your trade objectivity. So dapat the setup you're trading is what the market is showing, not because pinipilit mo, right? So next, when and at what price did you sell? So the previous slides we were talking about why did you buy, what price did you buy, how many did you buy. Dito naman, we're in the selling side naman. So now, when and at what price did you sell? And most importantly, why did you sell, right? So was there a sell signal? Did the price hit your target price? Or did it hit your stop loss? So dalawa lang yan siguro, right? So it's either price hit your target and you won, or price hit your stop loss and you lost. Or pwede rin, price hit your entry price and then break even stop ka, right? So those are the three reasons why you would sell, right? So there. Did you sell at your target? Did you sell at your stop loss? So there are instances where price already hit your target, but you didn't sell. So what happens is price went down, right? Wait, so let's draw that one. So let's say this is the resistance, this is the support. So let's say you bought here. Tapos price went up, tumama na sa resistance, this was your target, but you did not sell. What happened? Boom, price went down. Right? So parang you didn't follow your plan because price already went to your target, but you didn't sell. Or another example is, let's see, you bought at support, alam mo magbabounce na, pero boom. So dapat, you sold na here because your stop loss should have gotten hit na. But let's say you did not. You're like, tataas pa yan. What happens? It goes even lower, diba? Then you hate yourself because you didn't sell, right? So that's something you have to think about, diba? So did you either sell at your target or sell at your stop loss? If you did not sell at your target or you sold at your stop loss, then why did you not, right? It's something you have to think about. Were you stubborn that you kept on believing that the stock will go up even though price is saying na babagsak na ako, di ba? So there.
I actually have something to share. So recent, like a few weeks ago, I journaled my trade on ICT because earlier this year I bought the breakout around 220, and then it ended up it did do a run up, and then it formed a head and shoulders pattern. And you know how those are bearish signals, right?
Yeah.
So initially my trade plan was to hold and sell it at the break of the neckline, but at this time I ended up forgetting the fundamental side. I purely focused on the technical side, anticipated that the price would break the neckline, and I ended up selling too early. And then look at the price now. So the reason why journaling is so important is because it's reminding me to always follow the trade plan, refine the exit strategy, and to always not forget, because I put in the notes as well, like always remember the fundamental side and the technical side. Never forget one and the other, because sometimes because initially it was for a long term, and then I ended up forgetting why fundamentally ICT was so good. So I really focused on the technicals, and I ended up selling too early. So yeah, that's why journaling is so important. It helps you for the future, because when this happens again, I can remember the mistakes I made with the strategy.
Yeah, exactly. So here, what Franco basically said is this, changing your trade plan. So Franco was supposed to play ICT for a bigger picture move, right? But he micromanaged the trade into a short-term trade once he saw a bearish
that was a terrible
right?
mistake.
So that's what we're saying, right? You really have to reflect on why you sold. Was it the right decision to sell, or was it not, right? And basically with that, you're refining your exit strategy, right? So there. Now we move on to the next part, how much did you earn or lose in peso value and in percentage, right? So how many percent of your portfolio did you gain? So let's say you have a 100,000 peso portfolio. If you gain 2,000 pesos, that means you gain 2% of your portfolio, right? So something like that. And next is, if you lost, diba? If price hit your stop loss, did your loss exceed 1% of your total portfolio? Or did it exceed your computed value at risk, diba? Parang if you're risking 1,000 pesos lang or 1%, if you lost more than if you lost more than 1,000 pesos or 1% in your losing trade, that means may slippage ka, diba? There's something wrong, right? Kasi you're only supposed to lose a maximum of 1,000 pesos. So if it's beyond 1,000 pesos na loss, that means sumobra, diba, than what you plan to lose. So that's something that you have to look at. Then maybe you have to check if you computed your position size correct, or you just cut your losses way too late beyond your cut loss price, right? Next is, did you protect your profits? So there are some trades na, for example, you're already up 50%, pero where did you sell? You sold when you sold 25% gain na lang. So there's a mismatch, right? So you cannot give up too much gains, right? So example, if you're up 50%, where does it end, right? So if you're up 50%, if the stock drops, where will you sell it, right? So will you sell it when 50% gain becomes 40% na lang? Or will you allow it to go back down to 25%, right? So that's the point of protecting your profits, right? Where do you call it quits, right? Once you're up, where do you lock in the gains, right? So there. Next is, are you profitable month to date, MTD, month to date, and year to date? So for the month, for January, were you up? For February, are you up? Maybe you're down, right? Then year to date, from the start of the year, are you up? Are you down, right? Then, are you in a winning streak or losing streak? So you can see in your journal, kung sunod-sunod yung panalo mo, right? Then you're in a winning streak. Kung sunod-sunod talo mo, right? You're in a losing streak, right? So if you're on a winning streak, the challenge is not to be too greedy. Kasi if you're on a winning streak, you think you're Superman, right? You can do anything. So you would keep on trading bigger and bigger. And then when that one big loss happens, wala, you can get wiped out, diba? Then if same thing goes with the losing streak, like what I said before, if you're in a losing streak, tapos tira ng trades, diba? You might just lose it all because you're not getting anywhere, right? You're just losing. Then you're not learning your lesson, you're revenge trading, right? That will affect your bottom line. So basically here, you're trying to refine your bottom line, which is how much you're gaining, right? So think of trading as a business, right? The revenues are your gains, diba? Your expenses are your losses. So it doesn't matter if you have losses, diba? All businesses have expenses naman, right? What matters is your top line, which is your gains. They're bigger than your losses, which are your expenses, diba? Revenue minus expenses equals net income, diba? So think of trading as a business, same thing.
Yeah, you could have like lots of losing trades and a few winning trades, but those winning trades are really good because you had a really good trade idea and a trade plan. So that will always help you with your bottom line if you always keep your losses minimal. You follow your maximum trade loss, and you don't revenge trade and overtrade, of course.
So that's a good point. So really, you can still be profitable even though, let's say, out of 10 trades, you only have 3 winning trades, then 7 losing trades, right? It's possible to still be profitable as long as those 3 winning trades, they're really, really big gains that they outweigh all your 7 losses, right? So that's
Yeah, I guess just to share, This year, as of year to date, I've made about almost 30 trades. More than half are losses, but I'm up almost. Well, I'm up like between 10 to 15% already year to date in the Philippine market. So because of I'm journaling, following a trading plan, always revisiting my mistakes. My losing trades are always very small.
Right. So that's really the importance of risk management is so try to keep your losses as small as possible, but your gains, you try to let it run. So that's really the key. So next is screenshot of the chart. So like I said earlier, traders, they're usually visual learners, right? So if you tell a person you bought at this price, you sold at that price, it doesn't really give anything. But if you show the chart of where you entered, then where you exit, di ba? Mas magets mo, right? Because people are very visual, di ba? So keep a record of that. So how to do that? So if you're using TradingView, right, there's that camera icon. So you can just click on that, then copy the link or save the photo, right? So that's that. Then lastly, the most important step, the remarks and lessons from the trade. So first, you should ask yourself, what does the chart of the stock look like? Diba? Then in that chart, where did you enter? Then where did you exit? So you can put like annotations in your chart. So you can put like arrows. So I bought here and I sold there. And so parang nakamark sa chart. Then ask yourself, what pattern or formation did the stock do, diba? So parang breakout ba siya? Or buy and support? My chart pattern ba? Let's say, my cup and handle, my inverse head and shoulders, or whatever complex pattern, or as simple as it's a break of resistance, diba? So that's the pattern, diba? Then evaluate what was your trade plan again, what was your entry, stop loss target. Did the market uh allow itself to hit the trade plan? So did it hit your entry price? Was the setup valid, right? Then what did you learn from the trade? So if it's a good trade, you can jot it down. Good trade. What did you do right? So you can say that you were patient, you waited for the proper entry point, you executed without emotions, then you waited for the stock to hit your target. So the fluctuations between your entry and your target, you did not sell immediately because you followed your trade plan and waited for it to hit your target. So something like that. Or example, you were trading your profits, so you were up 50%. Then when the stock was only up 40% na lang, you sold it na, so you protected your profits, right? So that could be a good learning. Next is what mistakes did you do? Diba? So this does not apply only for losing trades. So pwede naman you made money, it's a winning trade, pero you had a lot of mistakes, diba? So an example would be you went all in, pero sinerte, diba? You made money, diba? So there you have to identify what mistakes you did in terms of stock selection, trade planning, trade execution, allocation, diba? Then trading psychology. What mistakes did you do? So let's say you panic sold because you heard the rumor na the company will shut down or something like that, right? So trade psychology, baka you just followed whatever you saw in the news or sabi ng kapitbahay mo na bilhin, di ba? So these are the mistakes that you can do. So just remember, it should have been through your watch list. So you should have looked at their fundamentals and technicals, should have made your trade plan, you should have computed your position size. Then when the price hits that, you execute. That's how it should work. If it's anything other than that, then you have a mistake, right? The next is, what's the cause of the mistake and what can I do to correct these mistakes in future trades? So example, breakout trade pero hinabol mo yung price, di ba? So you want to buy at 1 pesos, pero you bought at 1.10. So what's the mistake? Maybe you did not set your conditional order, your auto orders, diba? Because if you set your conditional buy on breakout order, then you don't have to chase the price, diba? So you already identified the mistake. You did not set your auto order. So what can you do to correct it? And you set your auto order next time, right? So that even though you're busy at work, if the market hits your buy on breakout price, it will execute because it's already programmed to do that, right? So here, you're trying to refine yourself. So now that we went through the whole process, let's look at some case studies naman of my personal trades, right? So first, let's look at CHP, Cemex Philippines. So what were the fundamentals? So the fundamentals were there was speculation that DMCI will acquire CHP at 3 pesos. So there were a lot of news articles around talking about it. So that's the fundamentals. Technicals, it was on a momentum stage with high volume. Then if you check the weekly chart, it was at the 1.8 resistance level. Then the trade idea was to buy the breakout at 1.8. Then you ride the momentum, hopefully until 3, if the rumor was true, right? Then you sell on weakness kasi it's a rumor pa rin, di ba? It can be false, di ba? So, ganun. So here's the weekly chart. So you see this level, this was a level for resistance, 1.8. Once we saw that price was already there, parang it sparked my interest, right? So when you look at the daily chart, I saw that price is just hovering at 1.8. So for me, I think this was a good buy on breakout opportunity. Then just set your stop loss below this candle's low. Diba? So very tight stop loss, diba? Because the reward is at 3 pesos. So laki ng risk to reward. So what happened here was there. Actually, me and Franco sabay kami bumili.
Yeah, we created the trade plan for this, and then yeah, we executed it.
Yeah, so we bought 1.8 around here. Our stop loss was at the low of the candle. So there, what happened was it rallied. But on the 3rd day of this rally, I mean 1, 2, 3, it's the 4th day, we saw a bearish candlestick. So this is a shooting star candle. So it's like price already went up during the day, but during the afternoon, there it went down. So parang there's a lot of sellers that push the price down. So once we saw this kind of level, we were a bit alarmed. So we started to sell around 2.11. Actually, Franco sold earlier than me.
I sold, I think, 219. I think,
Yeah.
yeah.
So Franco sold na, then I'm like, should I sell na rin? Then when I saw the candle like forming talaga, so wala, I just sold it na rin. So 2.11. So what's the remarks? So good execution. We sold when there was a sign of weakness. And we were not greedy enough to wait till 3 pesos because if you think about it, it's a rumor, diba? Speculation. And you don't know if the deal will push through, diba? So selling on the weakness, that was a good choice, right? So
Yeah, when you trade something very highly speculative like this, you always want to get out on the first sign of weakness because you really don't know what's going to happen on a speculative trade like this.
Yep. And as you can see, like the current price, right? I think it's below 2 pesos now. So we did the right call, right? So there. So lesson learned. Speculation plays should be sold at the first sign of weakness. Holding and hoping for the speculation to be true is a bad strategy. So there, this is an example of how you would journal your trades, right? So you have your entry, stop loss, the screenshot, when you bought, when you sold. Then you look back. Was it a good trade? Did you follow your trade plan? Right? What were the lessons? Right? If you learn something new, write it down, diba? Para di mo ma-forget, right? So that's CHP. So let's look at another example. Let's look at CNPF, so Century Pacific Food. So here, the fundamentals, This is the anticipated inclusion to the PSCI based on market cap and value traded. So these are the types of trades that I really love to trade. So based on my trading journal, I really love to trade the stocks for rebalancing. So yeah, this is sort of my favorite setup. Then technicals, it's a tight range at resistance. So my trade idea was to ride the inflow of funds, anticipating the inclusion to the PSCI. Then you buy the breakout of the tight range, then take profit at the next resistance. And in this case, it was the all-time high. So looking at the chart, this is how it looked like. So your all-time high resistance was around 29. And here, parang it's tightly consolidating here. So my idea was to buy the breakout of this range, stop loss below the low, target next resistance, right? So that was my trade plan. So what happened was there. So I bought the breakout. Actually, I bought here pa lang eh. It was a bit earlier than here, but buti it didn't hit my stop loss here. So I bought there 26.55. Then I sold here 20. Actually, I sold on this red candle. So it already hit my target of 29, but for me, I just held since it was above it. Then once it printed this red candle, that's when I sold there. So remarks, TP hit, target price hit, then the rebalancing might have already been priced in. So there, lesson learned, just take whatever profit you have. Do not obsess overthinking what if it goes higher pa, right? So because you can always re-enter if there's another setup. So I think this is really what holds people back. Like when taking profits, they're like, paano kung tumaas pa lalo, right? Parang, if I sell now and it goes up higher, I'll feel worse, di ba? So, it's really up to you. So, if your plan is to just sell at resistance, sell at your target, then sell it, right? But if you're the type to ride the trend where you just want to keep riding the trend, so you'll just raise your trading stop, then that's up to you. But for me, I'm not the type to really hold very long. So for me, I just want to hold for like less than a month, like a few days to weeks. So if that's your trader profile, then that's how you set your targets. So for me, I'm just looking for that few days to 1 week move, then I'm out because I'm already happy with that game, right? So that's for CNPF. Then next is SSI. So here's another of my trades. So what's the fundamentals? Massive earnings growth, so triple digits. So if I'm not mistaken, SSI owns like a lot of the luxury brands here in the Philippines.
Yep.
Like I think Louis Vuitton, I think they're the ones they operate the stores here. So that's the fundamentals. And this was during the recovery from COVID. So
A lot of pent-up demand.
yeah, so there's a lot of revenge spending, right? If you weren't able to go to the mall and then buy those expensive bags, right? Once the lockdown was over, then people went to the malls, then right, there's a lot of revenge spending. So that was my fundamentals. Then the technicals was it was at a 52-week high level. So my trade idea was trade the breakout of the 52-week high resistance. So here's how it looks like. So here's the resistance. This is the 52-week high resistance. So my trade plan was to buy here, 1.64 breakout, stop loss 1.57. Then my target next resistance at around 1.85. So what happened? This is what happened. So you can't win them all. So the past two examples I showed, those are winning trades. But the reality of it all is you can't win all the time, right? You're not perfect. So this was one of my most memorable losses. So here, if you remember, my stop loss was at 1.57, but where I ended up selling was 1.5 and 1.49. So once it hit my stop loss, I froze. I did not follow my planned stop loss. And I panic sold at the very low. So there. So I lost almost 10% in this trade, I mean. So yeah, this was a very memorable trade of mine.
Yeah, because Jared journaled that he's never gonna repeat that mistake again.
Yes. So what's my lesson learned? Follow your stop loss, right? It can be as simple as that, right? Follow your stop loss. Do not hesitate or delay cutting losses. Just cut it, right? So that's my lesson learned. Then just some reminders also, right? A good stock at a bad time is still a bad stock. So let's say you're trading a blue chip like SM, right? We all know SM's a good company. It's growing, right? You have all the malls in the Philippines, right? They're all over. But if the stock is downtrending, if it's going down and it's hitting your stop loss, then it's still a bad stock, right? So if your intention was to trade SM, but it's still going down, then it's still a bad stock, right? So that's what you have to understand. Fundamentally sound stocks can still go down and hit your stop loss. Like example, SM, right? Even though it's a blue chip, if it hits your stop loss, you gotta exit because no matter how fundamentally sound the stock is, if you're trading it, if it hits your stop loss, you get out. That's how it works if you're trading, right? This is different from long-term, right? Long-term investing, right? So that's a different approach. But if your objective is really just trading, like following the trend, then once it hits your stop loss, no matter if it's Jollibee, SM, Ayala, whatever fundamentally sound stock, if it hits your stop loss, you gotta get out. And next, even if it's a stock you like, di ba, parang paulit-ulit lang, once it hits your stop loss, you need to cut your losses and preserve your capital. Even if it's a stock very dear to your heart, right? Let's say SM, it hits your stop loss, you have to preserve your capital, right? So here, you're not allowed to fall in love with a stock, right? There's no stock that for every day it will keep going up, right? There will be periods where the stock will go up. There are periods where it will go down, right? So in trading, you just want to capture the up move, the uptrend up, right? But once it goes down, once it enters a downtrend or choppiness, once it hits your stop loss, you want to get out of that stock, right? So that's how we trade, right? We try to capture the momentum upwards, but once the momentum's gone, we want to exit our position. So there, and that ends my talk, guys.
All right. Thank you, Jared, so much for sharing with us how you journal your trades and some of your most memorable trades. To supplement what you have learned, account holders of Dragonfy will always be receiving weekly newsletters. So if you haven't already joined the Dragonfy community, we encourage you to download the app and create an account, making sure you never miss out on our news updates and insights. So let's begin with the Q&A segment. So please send in your questions to the comment section or chat box, and we'll do our very best to answer each one. All right, please send in your questions. Let's see if we have one question already. Or let's start with the first question. So what tips can you give traders to avoid over trading and revenge trading?
Okay, so this is very dear to my heart because I've been through cycles of over trading and revenge trading. And really the tip I can have is if you have 3 trades in a row that are losing, or 3 trades sunod-sunod, or you just have one really big loss, take a break. Maybe 1 day, 2 days, 3 days, even a week, diba? Depending on how bad the loss is or the losing streak. But the key here is to take some time away from the charts, away from trading, to reassess, right? You have to look at your journal again. What pattern does it have? Have I been doing the same mistakes? Have I been doing the same mistakes? If I am, then I want to look at it, assess what's driving those mistakes. And if I know what's driving them, I can already find the cure, right? So going back to the doctor analogy, right? So you're basically looking at the patient's symptoms. That's your trading journal. Once you identified repeated patterns, you can diagnose what's going on and then give medication, right? So that's basically it. So basically, take some time off from the charts, reassess, look at your journal, then just come back stronger, right? When you come back trading, make sure to not trade as big. So maybe if you're risking 1% of your portfolio per trade, after your trading break, maybe you can trade maybe 0.5% of your portfolio so that you can try to get that confidence back before trading more, right? So there.
All right, thank you. Let's see, have the next question. Next question. What if I buy stocks for the wrong reasons? What should I do? Is it better to just sell it and start anew with journaling this time, or wait until it hopefully price goes up? What other options?
Okay, so if you bought stocks for the wrong reason, so you have to assess again, right? So if you entered it for a trade and it went past your stop loss, then I would suggest that you just sell it already. It's also you can also look at the fundamentals. So let's say if it's a blue chip, if you're down really bad already, you can just check the fundamentals and see if there's a sliver of chance that it could rally a bit so that you can minimize your losses. But generally, when you bought the stocks for wrong reasons and you're down, generally you should try to sell. So any rallies up are just a chance to minimize your losses to sell. So I think it's really important that the stocks you buy, you have a plan. So if it's for long term, then it's for long term. If it's for trading, once it hits your stop loss, you're out na. No questions asked, right? So you really have to check back what was your intention in that stock, right? So if it's really invalid, your initial reason why you bought it, then for me, any rally in price is just a chance to minimize your losses and sell. How about you, Franco?
I think yes, you should. It would be better to sell it and start anew with journaling this time. But that's only, yeah, if the price is already, if you're in the red. But I think the best way to approach it, if you're still holding the stock, is to create a trade plan. Well, you already have no choice but to work with what you've got and create a trade plan while you're already in the position. And then look at the trend, see if it's in a down, and look at the bigger time frame, if it's a downtrend, uptrend, and then see if there are any potential catalysts, or if there are any, like, a lot of earnings are coming out or came out recently. So if you're holding any stock whose earnings came out, you can review that and see any potential indication for any future upside. Also saying, yeah. So as what Jared said, any rally would be a good chance to minimize the loss.
Yep.
Yeah. I hope that helps, and I hope you always, well, try not to enter a stock for the wrong reasons, because
Yes.
that normally does not end well.
Yeah, let's try to minimize those. So
All right, but that was a great question. How do you handle the swing of, emotions from big wins to big losses?
okay, so basically position sizing, it all comes to that. So if you feel that the swings of your equity curve are way too big, you have to lower your position size so that it won't be as erratic and your emotions are not high. So if you feel that when you win, sumasabay yung emotions mo. When you lose, sumasabay rin. So kung big win, you're like, yes, I'm Superman. Then when you lose, you're like, diba, you're sobrang deadbeat na, parang wala ka nang gana kumain, right? So the trick really is position sizing. So allocate the right position size so that you're level-headed, right? Because in trading, what's important is your mental capital. As long as you're in the right mindset, right, to pull the trigger, you can continuously execute it, and you have a chance to do well in the long run. But if you don't have your mental capital, then I don't think you'll survive in the long run, right? So big swings from big wins and losses, really take a break. So after every big win, take a break, because usually once you have a big win, you feel like you're perfect. You feel like you're Superman.
And that's
So,
when the market's gonna hit you with a lot.
yeah. So after a big win comes your biggest losses. That's why once you have a big win, take a break. Diba? Maybe celebrate that, yay. And after that, you come back, stay neutral. Like imagine after a big win, once you resume trading, think that you never made the gain in the first place, so that you can be humble, right? Then coming from big loss, take a break again. So reassess your trading journal, what went wrong. Then don't resume trading until you already made an action plan on how you're gonna address those mistakes. Then once you do, come back to trading, maybe lower your position size. So if you were risking 1% per trade, make it 0.5 so that you won't overtrade, right? And you won't dig a hole. So there.
All right, let's go to the next question. Hold on. Well, I'll read the questions from the chat box right now. So there was a question earlier. Aside from fundamental and technicals, do you do tape reading or broker analysis? Actually, we personally, I do look at the broker analysis, like which brokers are buying. Like for CHP, for example, Jared and I were taking note each day of who was buying, which brokers were buying CHP, and trying to gauge whether or not there would be selling pressure. But other than that, I don't necessarily read the tape, and then I don't really also rely on broker analysis because it really depends on your strategy. But although it would be a good addition, but personally, my strategy doesn't really involve that much broker analysis.
For me, answer is yes, I do. But this is a bit of a more advanced topic. And no one teaches this. No one teaches how to tape read and broker analysis. You really learn it from experience. So, but I personally, yeah, I do incorporate it. Especially in CHP, I was really looking at the top buyers and sellers. So if they were still buying, then we would hold. But once we saw the top buyer from the previous day, there's suddenly a top seller during the day, then it sort of gives us red flags, right? From warning signals that it could be over, right? So that's just an example. Then tape reading, yeah, we do look at the bid and ask. Like example for CHP, we're really looking at the bid and ask, seeing if the bids were still strong, right? And if the asks were too strong, right? So it's really a combination. But those really are mostly for speculative plays, right? But if you're trading like a blue chip, for example, then I don't think it really has much bearing. But if you're trading like really speculative plays, I think tape reading, broker analysis, it really is a powerful aid in determining your exit strategy. But generally, this is mostly for speculative plays, but for blue chips, I don't really like. Example, we traded MWC. We didn't really look at the broker analysis because we like the fundamentals of the company. So we wouldn't really care what who was the top buyer, right? So those are some instances. So yeah.
Yeah, thank you for that great question. Let's move on to the next. What is the best trading strategy for a person with a full-time job?
Okay, so if you have a full-time job, I guess position trading. So
Yeah, I agree with that.
that would be generally holding for months. So maybe 1 to 3 months usually. So that would involve maybe buying a key breakout or buying at support, then just riding the trend, right? So when you do position trading, maybe you set a moving average as your trail stop. So for example, you will only sell once the stock closes below the 20-day moving average or maybe the 50-day. So that's really what a position trader does. So you're trying to ride uptrends, then you sell once it breaks your trail stop, which is usually a 50-day moving average. How about you, Franco?
Oh yeah, so positions trading would be, I guess, the ideal strategy for someone who has a full-time job and cannot commit to day trading or swing trades because that requires much more attention to the market. And a good addition to your to the position trading strategies to take advantage of conditional orders. That will really help you when you can't always watch the market. And with regards when Jared did mention like trading stops and moving averages, I think well, just to share, a good strategy is to look at the is to go back a few time frames like months or years maybe, and then see what moving average that the price follows the most, and then you can use that moving average as your stop. For example, if every time a stock's price breaks the like 50-day moving average and it's always followed by a downward trend, then the 50-day moving average would be your stop and not the 20-day.
So that's basically backtesting
Yeah.
the strategy.
All right, let's go to the next. What can you say about what can you say about consensus rating and buy and sell recommendations? Is it a good factor to consider when trading?
Um, yes, I think it still is, right? So generally if it's a buy recommendation, then maybe that's like an added conviction to you. But for trading, that's just one part, right? Because sometimes the example, the broker report could be hold, but it still goes up, right? So it really depends. You have to when you look at buy and sell recommendations, you don't just look at it whether if it's a buy, then you think it will automatically go up. If it's a sell, then it'll go down. If it's a hold, it'll probably not move. So because for example, there some reasons why a stock could be on hold because the price is so strong, it keeps going up that it's higher or far from the fair value, right? For example, ICT, I think our fair value is like
It's lower, a
lower,
lot
like
lower.
200 something to 40 or forgot. But where's the price right now? 300. So that's why it's on hold because we cannot say buy when the fair value is lower than the current price, right? So generally, that's what you have to think of. What's the quality of the company? If it's a really high quality company, then it can just keep on exceeding the analyst target, even though it's on hold, right? So there. How about you, Franco?
Yeah, I think it's helpful to consider and take into consideration the buy and sell recommendations of the consensus reports and research reports because they always have a fundamental basis for their ratings, right? So it's a good it really helps you identify what price targets you can most likely hit or what stocks are no longer fundamentally sound. But at the end of the day, it will really rely on your trade plan you set, because sometimes for me, I try to drown out the noise, right? The noise referring to like a lot of investor sentiment, a lot of people commenting like, "Oh, this is a good stock, we should buy this. Oh, this is going to happen," right? So you really have to learn how to filter out those noises, and that goes for consensus reports because it oftentimes brokers can give different ratings and price targets. So it's up to you to filter them out and to, based on your own research and analysis, determine what prices, what recommendations you will be following. I hope that helps you. Unfortunately, that is all the time we have to answer your Q&As. But don't worry, because you can send us your questions and we'll get back to you through email. So that ends our Technical Analysis 101 from Charts to Profits webinar series. We had 3 parts, and if you missed any, you can find the replays on our Facebook page and YouTube channel. So a massive thank you to everyone who joined us today, not only today, but also throughout the entire series. It is our sincerest hope that this webinar has helped you with your technical understanding and trades. And so we invite you to share your thoughts in the chat box or comment section, or email us directly if you wish for us to continue more of these webinar series. So for all things stocks and trades, don't forget to like our Facebook page and join our Facebook group so you won't miss any of our updates. If you have any more questions and about today's webinar or anything related to stock trading, you can email us at investingclub at dragonfly.ph, and we'll get back to you as soon as possible. That concludes our webinar. Thank you so much for joining, and have a great night.
Thank you, guys.